a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about oil services ETFs. And we know that energy is the best performing sector this year, again, handily significantly beating the S&P 500 index. And that is mainly because of this continued supply-demand imbalances for oil, and crude prices have almost quadrupled since their lows in March 2020. That was at the time of the pandemic. Now, lately, oil services stocks have started outperforming. Companies like Schlumberger, which recently rebranded itself as SLB, and Halliburton. These are the picks and shovel companies that provide services to giants like Exxon and Chevron. They help them with the exploration, production, and other services. So these companies had underperformed the integrated oil companies last year, but lately these companies have started doing very well. They reported blockbuster results, best profits in many years. Now, so looking at slightly longer term, the demand for technological advances may keep these companies' pricing power high, because we know that the energy industry had decades years, or if not decades, of underinvestment. So that is why there is need for technological enhancements. And then these companies are also investing in newer energy solutions like clean hydrogen, carbon capture technologies, low carbon neutral technologies, because we know that there is a need for transition, and the war in Ukraine has accelerated that transition to alternative sources of energy, but we are not yet ready for that transition. So in the coming years, we will have to live with both forms of energy. Now, I have talked about energy ETFs in the past videos many times. So today I'm going to focus on ETFs that invest in these oil services stocks in particular. So the first one we are highlighting is one of the oldest in the space, and also the most popular oil services ETF by VanEck, ticker symbol OIH. It holds 25 largest and most liquid oil services companies, which derive more than 50% of their revenue from oil equipment, services, or drilling. Very popular with 2.6 billion in assets, and charges 35 basis points expense ratio. If you want to learn more about this ETF, you can go to the quote page on Zacks.com. You see the search there in price, the recent price performance, and you can use the link to go to the external web page, the VanEck web page for this ETF. It will show you how it selects and holds companies. You can look at the top holdings. So at the time of rebalancing, these top holdings are capped at around 20%. Schlumberger, which rebranded as SLB, is the top holding, and then you see Halliburton. Now, the second I'm highlighting is somewhat similar, because this also has modified market cap weighting scheme, slightly different caps, but this also holds 26 oil equipment and services stocks by iShares. Ticker symbol is IEZ. 39 basis points expense ratio, but much smaller, 220 million in assets. Again, you can go to the quote page on Zacks.com, and using the link iShares web page for the ETF, year to date up 56%, more than 56%. So domestic oil equipment and services stocks, and you can look at the holdings for this ETF slightly different. Halliburton is also more than 20%, and Schlumberger is almost 25% in the portfolio. And then you see the smaller oil services companies. Now, the third one that I'm highlighting is by State Street Spider, S&P Oil and Gas Equipment and Services ETF, ticker symbol XES. Now, this holds 33 oil and gas equipment and services stocks, so more number of stocks and different weighting scheme. This is equally weighted, almost equally weighted at the time of rebalancing. So you will see a different kind of exposure, more tilted towards the smaller mid-sized companies in the space, and a little away from the giants, Schlumberger and Halliburton. Similar expense ratio, 35 basis points, and has 350 million in assets. Again, you can go to the quote page on Zacks.com and the Spider web page, and basically this also describes that it holds oil and gas stocks, but you will see that they are almost equally weighted in the portfolio. Now, on the last slide, I have the comparative performance over the past 1 year. So the two market cap weighted ETFs are up about 40%. The equal weighted ETF is up about 33-34%, whereas the S&P 500 index, despite this recent rebound in October, it is down almost 15% over the past year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything, and I will see you next week.